Welcome to Spidell's California Minute. I'm your host, Catherine Zidane. This week we're covering California conformity and nonconformity to various Secure 2.0 Act provisions. We'll be covering the Secure 2.0 Act extensively at Spidell's Federal and California Tax Update, and attendees will also be able to access a chart of provisions and whether California conforms. You can register for a live seminar or webinar option at caltax.com. California conformity when it comes to retirement plan and savings provisions is complex at best, which means that the question of whether California conforms to the Secure 2.0 Act does not have a straightforward yes or no answer. Regarding California conformity generally, California only conforms to federal tax law as it was in effect on a specified date, which is currently January 1st, 2015. One major exception to this rule involves retirement plans. California automatically conforms to any federal law changes governing retirement plans as they relate to minimum funding standards and benefit limitations. This means if a plan is considered a qualified plan for federal purposes, it's a qualified plan for California tax purposes. This includes any provisions governing Roth plans. California automatically conforms to the Secure 2.0 provisions that allow simple IRAs and SEP IRAs to be designated as Roth accounts, mandate that matching contributions for higher income employees be made on a Roth basis, and allow employers to provide matching or non-elective contributions on a Roth basis. California also automatically conforms to the federal required minimum distribution provisions, including the Secure 2.0 Act increase in the age taxpayers have to take RMDs from age 72 to 73 and eventually 75. But even though California automatically conforms to retirement plan qualification provisions, California does not automatically conform to provisions that address whether contributions are deductible or distributions are exempt. So California conforms to all plan changes, but changes in the dollar limitation on the exclusion from wages or increased deductions from income do not automatically apply. This means California does not currently conform to the Secure 2.0 Act increased deductible IRA and qualified plan contribution limits. If California does not enact conforming legislation, taxpayers will only be able to claim deductions for the pre-Secure 2.0 Act deductible contribution amounts on the California return, resulting in a higher California basis in these accounts. The earnings on the excess distributions will only be taxed when distributed. Other Secure 2.0 Act provisions that California does not conform to include, but are not limited to, the following. California does not conform to the provision that allows taxpayers who have held a Section 529 account for at least 15 years to make a tax-free rollover to the beneficiary's Roth IRA for post-2023 distributions. This means that any earnings included in these distributions are subject to California tax and the 2.5% early withdrawal penalty. California does not conform to the provision that increases the non-taxable loan amount a taxpayer residing in a presidentially declared disaster area can take from their retirement account. This limit was increased from $50,000 to $100,000 and up to the full value of the account rather than 50%. For California purposes, loan amounts made in excess of $50,000 or 50% of the account value or repaid after the pre-Secure 2.0 Act deadline are taxable income. California also does not conform to the Secure 2.0 Act provisions regarding the Small Employer Pension Plan Startup Credit and the new credit for employers that accelerate eligibility and vesting in employer-provided retirement plans for military spouses. Spidell's analysis and explanation of California taxes is the most complete and best-priced California tax guide and includes periodic updates during the year. You can pre-order the 2024 edition now and see more details and features of this all-California reference manual at caltax.com under Publications. That's all for this week. Join us next time for another installment of Spidell's California Minute.